Hi there, it's Sunday the 24th of January 2016. My name's Andy Rowe, this is trendfollower.co.uk, and I'm going to look at some of the asset classes that I like to trade and see whether I should be in or out of the market. So starting with shares, of course, which have had a very rough and tumble ride in recent weeks. I've been away out of the country for a couple of weeks and been watching it at a distance. I've been out of the market and I've been very happy to be out of the market, because you can see, if we look at the share price of the investment trust that I use mostly to decide whether to be in or out of the market, the price is well and truly below the 52 MA, which is the average price for the year. This is the green line here. That sell signal was triggered a couple of weeks ago, and the price, although it has risen, it must be said, in this past week significantly, it still is below the 52 MA. So that's telling me to be out of the market. So I'm out of the market and I'm very happy to be out of the market. Now, there's another investment trust that I also follow, which is a more focused investment trust. This exhibits more trendiness, and I'll show you that one as well. And that's here, and you can see that back in the spring of this year there was a buy signal triggered as the price rose up through the 52 MA, and it's been doing very well. I was not tracking this investment trust at the time, so I'm not invested, and it was doing very well until a couple of weeks ago when the share prices started to tank and it fell down dramatically. But although it fell dramatically, it's still above the 52 MA. So if I did hold shares in this investment trust, I would still hold them. They may go up again. So that's the whole point of having a line in the sand. Really, that's what helps me. That's what makes me decide whether to be in or out of the market. So so if I was invested in this investment trust, I would remain invested in this investment trust. Now I'm going to talk a little bit now about bonds. I've mentioned before that bonds are not very trendy. In other words, they sort of vacillate around a little bit, going below and above their moving average quite a bit. They're quite difficult to trend trade. In fact, there's a strong argument for not even trying to trend trade bonds, because one can just end up losing lots of money in trading fees. So I'm actually probably going to take bonds out of the equation. I'll probably make some lump sum investments in bonds and just be done with it and just leave them. I'll probably invest in bonds that are derived from different currencies. So I'll talk more about it in a separate post, but it's not really worth trying to trade bonds, I don't think, because I just end up being all over the place. But this is one bond ETF that I do look at, and it's been falling, but say in the past couple of weeks it's gone up, presumably in response to the turbulence in the share aspect of the market. So it might give a buy signal shortly, I don't know, but I'm probably not going to try and trade bonds. Going to go on now to property, and you can see where a sell signal was generated back here a few weeks ago, telling me to get out of the property market and sell my property investment trust shares, which I did, and it's gyrated around a little bit. A few weeks ago it came right up to the 52 MA, kind of kissed it and then bounced down hard, and is now well down, about 10% down below its price here. So I'm very happy to be out of the property market. This to me looks like a falling market, a series of lower highs and lower lows, and who knows how low the property market will go. I will stay out of it until the price rises above the 52 MA, at which point I will re-enter the property market. Moving on to commodities, I own lots of commodity ETFs and shares, and it's been a complete disaster for me. You can see how the commodity prices have been falling for a long time. They're still falling. The past couple of weeks they've fallen further. A lot of this is driven by the fall in oil price. So yeah, now's not the time to be in commodities, even though I am in commodities. I've not been doing this trend trading system for long enough, and I'll just hang on to those trades. When the price of this investment trust rises above the 52 MA, I will go long commodities rather more. So technically I should be out, but I'm not. Now, gold has risen a little bit in the past few weeks in response to the gyrations of the markets. It's higher than it was back in October, but still has not got to the height at which it would trigger a buy signal for me. So I'm not putting any of my funds of this trading fund into gold at the moment. I'm happy to be out of it. You can see that really from the peak in 2011, it's fallen quite a long way. Now, will it fall further? Who knows? I'm not going to try and predict how low it will go. I'm just going to wait until I get a buy signal, and then I will go long gold. So there we go. Happy to be out of shares mostly. Bonds, really, I'm going to start to forget about bonds and just not try and trend trade them at all. Very happy to be out of the property market. Commodities, I should be out of the commodity sector, and gold, I should be out of the gold sector as well. So that's really the asset sectors. Now, there is one other sector that I've been starting to get into, and that's the Forex sector. So I've got two Forex trades. They're both long trades, and you can see this is the price of the Japanese yen against the US dollar. So the Japanese yen has fallen a lot since 2011, really. Middle part of 2011 was its peak, and it's been falling, albeit with some ups and downs since then. And really, it sort of seemed to bottom out in the summer, and since then it's been trying to rise. And in December, it rose up through the 52 MA. Did it twice back here, so a couple of false starts, but then broke through the 52 MA and has continued to rise. So I am long the Japanese yen against the US dollar. So I'm doing this through an ETF. I may spread bet it as well, but at the moment it's an ETF trade, and that's it. So I'm long the Japanese yen against the US dollar. I also have a long trade in another currency pair. So this is the Swedish krona, which you can see had been falling against the British pound. So it's been a bit all over the place here, but then since 2013 it's been falling down. It came up, kissed the 52 MA, fell back down again, and has now broken through it. So to me, that's quite a good sign of a change in sentiment. So either the Swedish krona is getting stronger, or the British pound is getting weaker. It doesn't really matter, or a combination of the two. All that matters is that relative to one another, the Swedish krona gets stronger and the British pound gets weaker. And if that continues to happen, then my trade will become increasingly profitable. So there you can see it. I'm going to trade it using exactly the same rules. I will just stay long this position until it closes below the 52 MA at the end of a trading week, at which case I will exit the position, hopefully for a profit somewhere up here, maybe £56 or something. So could go up maybe 20%. How long that will take, I don't know, but I'm not trying to predict it. It could all fall down next week and go bad on me, in which case I'll come out of the trade anyway. So that's my new asset class, really, is Forex. I see this as being quite an interesting way to diversify my trading so that things are not too correlated. So one of the problems with having booms and busts is that if everything goes bad, then everything goes bad, because they are correlated. And so often if share prices fall, property prices fall as well. Now, in recent times, we're sort of having all of it as well, because gold's falling, commodities are falling as well. It's all going pear-shaped, but it is possible to find areas where it's going the other way, and that's what I hope I found in these two trades. So I'll see. I may add to the positions over the next few weeks, but I'm certainly be interested to see how these Forex trades go. So there you go. Have a great week. I'll catch up with you next week, and take care. Okay. Bye for now.